Well, hello, folks. I'm L.A. Little, and this is your NeoTA wrap, where we take a look at these markets, and we do it from a neoclassical perspective each time, asking ourselves what happened today, and what does it tell us about the coming ones. I do this show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel L.A. Little. You can catch me there anytime, any device at your convenience. As far as these markets, not very convenient at all. They took a pretty good spill and just kept going. And if we look at the numbers here, you can see what I mean. We had the Dow down 223 points. We haven't seen this kind of, pare back, if you will, in price in 3 years, 2.5 years, 3 years. Right across the board, 1.5, anywhere from 1 3/4 on the Russell, all the way down. Now that doesn't look right on the Russell. When I was looking earlier, and again, we'll look at it when we get there. I don't think the Russell was down that much percentage-wise. Commodities, all the commodities up, dollar down 0.5%, oil down again. It seems like that's a daily occurrence anymore. And we're just not getting any kind of relief there, but I think we're getting close in terms of bounces in some of these oversold sectors. I mean, some of these sectors have just basically been wiped out. And so we'll look at some of that, and we'll consider the fact that, are we washed out yet? Are we going to get something to the upside? Speaking of the upside, let's take a look at the indexes. Let's start with the S&P 500. It's kind of hard to think upside when you're sitting here looking at the downside as we are. Breaks the swing point low, volume expands relative to that, less than the prior bar on Friday, but volume expanding on the way down, 3 big bars down. Folks, if you count that, top 1967, 1874, you're down almost 100 points in 3 sessions. 100 points on this index is roughly 5%. So you're knocking off about 1.3, 1.4% a day. That's not sustainable. And I suspect you're reaching a point here where we will see some sort of a bounce. Where does it come from and what does it mean? Well, it doesn't mean anything unless it can break through the retest, regenerate that's going to exist on all these charts now. The way you find that is you go find your swing point low that you broke, you draw your line across it. Now, if it takes more than 6 bars to get back up there, probabilities are pretty high it's not going to break over it. As a matter of fact, if it takes more than 6 bars, the bottom of the bar is typically where you can expect to go to. All the volume sits right there. It makes me think you may see some sort of action like this on this, on this. Well, if I could get these drawn in right, let's do it with this bar. You may see some sort of action where you're kind of doing this stuff right before it gets back up there. So we may have just sideways drift back up. Maybe for 2 or 3 bars, maybe even 6 bars before we get back up there to test it. That is going to be a hard spot to break back over now, given that and this. And if you look at all these charts, they're all going to look the same way. That's 1.33% down roughly. So, let's just say you go up 0.5%. It really doesn't do a lot to correct the damage that has been done. But a bounce, yeah. A bounce does make sense, and it does make sense here fairly soon, more than likely. Let's look at the Dow. Dow's got the same sort of setup, breaks lower, just gets up underneath the swing point low. Transitions are actually just reaffirms trend to the downside. All these are bearish on this time frame. And one thing I didn't show on the S&P 500, which I'll go back to and should show, that is that if we were to close at these levels, we would be breaking on the weekly as well. And so you can see the damage that is starting to really take place in these indexes. Let's go to the NASDAQ. Remember, the NASDAQ broke down on Friday, confirmed bearish, reaffirmed bearish basically, escalates farther down, And now you can get a sense of what's happening in terms of when these things bounce, right? Let's just say this does start to bounce back up. Even if it comes up, it's probably going to take it 4, 5, 6 bars to get back up there, which says it's going to be very difficult to get back over even this area, much less that one. So you can see how the bearishness is starting to be more pervasive, and it's going to take a while to reconstruct all of this. Assuming that this market's going to want to go higher, it's not something that's going to happen overnight. It's just not going to happen. I mean, the little V-shaped bounces we've seen, they're not going to materialize this time. And when I say a V-shaped bounce, yeah, we can get something that looks like this, right? And I'll take it from this last point. We can get something that looks like this, but I don't think you're going to see something that does that. I just don't think that's in the cards. We'd have to have, the Fed roll out another QE program, Europe to actually do QE. We'd have to have a lot of things happen to see that sort of action probably take place at this point. And these earnings would have to be fantastic. And talking about earnings, those are coming out tomorrow, and those are going to be a big piece of what happens this week. You got 3 banks in the morning, Citi, JP Morgan, and Wells Fargo. Those are big 3. All of them should be better than expected. Let's see how the market treats them. After the bell, you got chip stocks. You got LLTC, you got INTC, Intel. If you remember, Intel has been on a tear, got pulled back. I wonder if it's going to make it back to 30 now. Going to the NDX looks pretty much the same. It also broke down today, breaks the swing point low. All of these have broken at this point. And then we go to the Russell, and let me see. Yeah, so that number I thought is true. So the Russell was down 0.38%. And the reason that's important is because the Russell is outperforming the other indexes at this juncture. Now that's important because the Russell is the one that has been the weakest, and you always want to see the weakest start to turn if you're going to get a turn in the markets. If we do the ABCD structure that was in place, it finished off today. It's done, kaput, over. So you finish it off, volume tails off a bit, you finish off ABCD structures, and your relative strength is in this index now compared to the others. That's another clue that you're probably going to see some sort of a bounce develop as a result of this. So that's the Russell, that's the indexes. Now what isn't ready are the sectors. And so when I pop over to the sectors and take a quick look at some of these, you can see some of these are just starting to break down. Although the IBB is coming in and doing a retest regen, it's got higher volume. This one can break down farther. IYT just totally collapses. And this is true not only on this time frame, but this is true on this time frame. 2 swing point lows break. If it holds down here this week, you're going to get multiple swing points again on multiple time frames. The SOX, total collapse, right? Just continues to barrel down. The XLB, total collapse. XLE, now this one actually looks to me like it's getting close. I mean, after what do we got, a 20% decline, more than that, more than a 20% decline straight down over 2 months. I think you're getting close here. Let me see what the OIH looks like while we're here. And let's see what this one's doing. Same sort of things. And what I mean by that is you get big volume and you don't get escalation of volume the next day. It doesn't mean it's over, but you're getting close. And these volumes are getting up into the ranges now where they really are washout type volume. So if the OIH, the XLE washes out, then you can see some sort of a decent bounce in this sector, which has been just decimated. XLF not as bad, but going after the lows. XLI washout, not washout, just a complete collapse. The XLK starting to collapse. 2 big volume bars, big spike lower. This one's also breaking now on the weekly as well. So you've got, you can see the damage. I don't have to go through every one of these. So going back, doing the synopsis here, kind of the summary, where are we? When I look at these markets, we're getting there. We're not quite there yet. Washing out starting to take place. We can get a bounce from here. You can get a bounce at any point now because you've pushed far enough, fast enough. And so any kind of a bounce, but that bounce isn't going to be much of a bounce, most likely. And you're going to see it come right back at those lows. And if that test holds, right, then you can get something going on. But initially here, given the damage that's done and the way these indexes and sectors are set up now, and I'm going to pull up the S&P 500 one more time and kind of just map out a quick scenario here. Let's say that tomorrow you get a bounce, and maybe you get another one the next day off the earnings, and then you come back down and you test. If you can test here and hold this low, have less volume down here, right, then you can get a decent bounce back up. But that's the sort of thing that's probably going to have to take place to get any kind of decent bounce that's going to hold. If you don't get that first and you just keep climbing up here day after day, and maybe you get back up here on the fourth day or something, this is probably going to send it right back the other way. And the bad part about that, folks, is it sets up a big ABCD structure to the downside if it breaks. And if you go out here for a week or so, you kind of wash out all this oversold, allowing it to do that. So what you can see, the better scenario from a bullish perspective is you go up a little bit, you come back down, you test it. And you can't break it. The sellers don't show up. If it plays out that way, then you can get the bigger move back to the top side. But that takes patience. You have to watch it. You have to play it. And give it a chance to develop. And if it does, then it's playable. But right now, you're not in that state. And hopefully, the broadcast I've been doing that you've been listening to, you've positioned yourself so you're not sitting down here holding so much inventory that you're afraid to do anything. That's typically what happens. And, one of the worst things you can do is wait to the point where you're down 5-6% already. I don't know exactly what the number is here tonight, but it looks like it's about 6%, right? Let's just call it 6. So you're down 6%. Let's say this thing gets down 7, maybe 7% before it's done. Are you going to be buying there? It's probably the place to buy. No, if you're down this much, if you were holding 100% of your portfolio, or let's just say 90% of your portfolio, and let's say that all those stocks that you hold have gone down as much as the market or worse, are you going to be buying? I doubt it. And that's the rub, right? If you wait too late, you have no options. And all you do is you get the bounce, you can't do anything with it, and all you can do is sell out at a worse price. That's what's going to happen to most people. That is how resistance sets up. And if we look one more time, at the Russell, and we bring it up on the weekly, folks, this thing has set up a huge distribution top. Anybody that bought up here is underwater. And they're going to be underwater and stay underwater, right? Because anytime this bounces now, they're going to want to sell into any of these areas. Just try to get their money back. Everybody wants to get out for even when things turn bad. Well, you could have done something about that before it happened, right? You knew you had a break point on multiple swing points here. At least you could have got out there. That was 60 points ago. That was, what, 2%? More than 2%, almost 3%. It's a big difference. So, all right, so that's the summary. I think, we're getting to the point where you can get a bounce any day. If you get the Fed coming out and saying something, jacking things up, if the earnings come out really well in the morning and they actually buy the financials, we could get a bounce. The financials are not in that bad a shape. They can bounce. Financials are a big part of the S&P. So, it's going to be how it plays out. Some catalyst will come along probably this week and will allow a bounce. It's just a question of, is it tomorrow? Is it, Wednesday? Do we have to wait until Thursday? When's it going to come? It will come at some point. You can't play it in the sense that you can't sit there and game it unless you're trading intraday and you're, really on top of what's happening. But the bounce is probably going to be something you want to sell, especially if it comes quickly. You want to, take some of that inventory and let it go, and reposition a little bit so when the retest comes, you have some options. Let's look at, I had a viewer question. Last night I knew I had one more and I forgot it. I want to tackle it here before I go any farther tonight so I don't forget it, for one thing. And then two, it looked like it was a little bit involved, so it may take me a while. Let's take a look at it here. So the question is, okay, I'll just read it and we'll go through it. Let me pop over and grab the chart, and this will kind of segue us into the aux markets. So it's about the TLT. Let me see. This was written on Friday, so we'll be looking at Friday to answer the question. Here's the TLT. So I have a question about volume. I would like to use your discussion in last evening's video about the daily TLT chart as a reference. So it had to do with Thursday's chart, and that was this bar, October 9th. Let me make sure. Yeah, October 9th. Okay, so this bar, let me just put a little square around the guy so we know which one we're talking about. We're talking about this bar. You said that that yesterday was a failure, but it left volume at the top. Therefore, you expect the high to be retested at some point. And he wrote this early. It looks like early Friday morning. When you have a negative down day like the TLT did, so it closed lower, right? It was over the top. It tested this high, got over it, back under it, but it had more volume. This was what I was talking about. When you line up the volumes, you have more volume here than you do over there, and you have more volume on this bar than the prior bar. So he says, well, you have a negative down day on higher volume. Why isn't that considered bearish? A failure at the high, a downside reversal with a lower close on expanding volume. I have trouble rationalizing both tops and the bottoms where a reversal occurs and leaves volume that it implies a retest of a top or bottom. Do I have to know how much of a daily volume was buying and how much was selling? Sometimes you can look inside to see, take that last piece of the question first. Sometimes you can look inside to try to see what that volume actually showed up as. Most of the time you're not going to be able to, and once you get out a little ways, like if I were to go back and look at, say, I don't know, take this volume, and that actually was a reversal, so that was not a good one. Like here's volume at the low, right? So you got volume at the low comparatively, although this was testing this low and it actually has lighter volume, right? But it had lighter volume than the previous day. You're really looking at two things. Okay, so let's take this particular example. Sometimes, you can look inside and it might make sense, but most of the time that's not what you want to do. Most of the time you just want to take what's there and try to read what it means. When you have a swing point high and you're trying to get over the high, and you do get over it, but you come back under it. In this particular case, you got over it, you couldn't stay over it, but you came back, but the volume expanded as you went over it. In other words, there were more buyers at higher prices. They were willing to pay up to get in. Okay, that's the key concept. Now, in this particular case, it wasn't like huge volume. It wasn't up here somewhere. I mean, there I would have been even more confident in saying that. But given that the trend was doing this, right? You had trend going up. The previous bar had lighter volume, the swing point had lighter volume, and then you push heavier volume over that high. More than likely, you're going to try to get over it again. And it did it the very next day, and of course extended farther now. But, that's, I don't know how to rationalize it any more than to say if they're willing to pay higher price in greater numbers, then they're probably going to try again. They're probably not going to give up on one shot. They're going to go up there and try it again because they're hitting it with more volume. Now, in the opposite case, it's true as well. And we were just talking about this case. Here's another case where you're testing the low, volume here, right, versus volume there. You can see that the volume is less as you test. So even though it closed under it, you really got to see one more bar to extend down, because you didn't have more sellers at lower and lower prices. I want to see the sellers, especially on the downside, I want to see the sellers escalate. I don't want to see them kind of peek over there and maybe just close under it, but nothing special, right? I want to see it escalate. I want to see people start to dump. That tells me it's going to continue. Otherwise, it's probably going to try to flip around. You get a doji the next day, and then the volume comes in back to the upside. These charts, these volume points, they're good tells. They really are good tells. But they're only good tells at key places, right? It only matters at key spots. Like here's a good one. Here's another one. You get over the high, right? See this one here? You push into it. Volume is a lot less than that one. You push into it. You even get over it up here. 2 bars even. And then you gap down, right? You didn't have the juice. You didn't have more and more buyers willing to pay up at that point in time. And then you got a heck of a pullback as a result. It can last, you want to see, I usually say you want to see at least another bar or two, right? In this case, you got the bar here, you got the next bar, and I'd like to see maybe one more bar, and we didn't get it. That gives me enough confidence. Usually 1 bar I'll even gamble on sometimes, but in this case the volumes here were dramatically different, and so you had to be careful on that. But that's the idea, and that's the way it works. And as we go forward, I'll try to remember to point this out in other cases as we see, and we'll talk about it a little bit more, because you have to, when you're tape reading, you have to kind of ad lib. Not every situation is exactly the same. We got a swing point high. We got a previous day's volume. There's a couple things here at work. Plus, we had a strong trend. All of that together gives it a pretty good chance that it's going to try again. And, if all those things weren't present, then I probably wouldn't be that bullish on it, in terms of thinking it would do it immediately or do it fairly soon. So, all right. Hope that answers the question. Let's see here. What else? Let's take a few minutes and go back to why we're here on the ox markets. So one of the things that we've seen recently is we've seen the dollar finally plateau up here. Remember, we were talking about the dollar trying to get back probably into this bar eventually, right? These 2 bars here. So the zone I believe it's going to try to get back to is this little area here. Now, so far, it's holding this higher support zone that the charts are showing you. And this one isn't anchored to anything, which is why you don't get any kind of you don't get this up here somewhere, because there's just nothing to anchor it to. It's all by itself. There's no wide price spread bars hardly. This one's close, but they're just not large enough to be wide price spread in most cases. Here's a wide price spread, but this is too far away. The bar is. So anyway, the point is I believe it's going to try to get back as low. I would be surprised if it gets any lower than that. That's where I think it's going to try to get to. It may not get there. Right now it's plateauing up here. It's got volume, and here's another case. We have volume at the highs, right? We did a high with volume escalation. Then we came off here with less volume. Then we got the big spike down, but we're already down quite a ways, and now it's testing. You get a spike up with volume. This all tells me that we're probably going to see this range up here start to build out, and it's probably going to sideways for a while, and then we'll see which way it wants to break. Does it break back down or does it break up, right? That will be the test, but initially it looks like it's going to build out the range, and if I look at the weekly, I believe the weekly probably, Yeah, so the weekly set up even better. Now the weekly also, here's a different kind of case. The weekly has set up a volume off the top. So when you see volume escalate off the top, right, as you see in this case, that says at best you're going to range trade for a while. So it's going to be very hard to get back over this top. And so that probably puts it in a range trade. Your prior swing point high, your retest regen, would be way down here at 22.20. So this thing, given the way it came off on the weekly, gives me quite a bit of confidence to say more than likely we're not going to see this thing just power ahead yet. You know, this 22.20 down in here, this low, it may make it all the way back down there. And believe me, there's not very many people are probably thinking that right now. And one of the things I've been noticing is Germany is kind of saying, I'm not so sure we're going to QE yet. And we may get an ABCD structure to take us back into this bar, into this zone, and potentially get us as low as here eventually. So I just don't see this. Now, the reason I went to the dollar is because the dollar, of course, is controlling all these commodities. Now, oil's kind of in a world of its own, and it is trying to put in a bottom. 2 dojis at the bottom here. I suspect it's about ready to bounce, which is one of the reasons I think the XLE is about ready. But the other thing here is all these commodities like silver, you know, starting to get a little lift up. Gold starting to get a little lift. These things are all based on the dollar getting cheaper, not more expensive. And I suspect they're going to try to continue to do that if that dollar does what I think it's going to do, which is plateau here and work sideways for a while. So given that, I suspect in the rest of the market, we're going to see, you know, gold kind of hang in there, kind of build out another bottom. Same thing, silver, copper, all those things. While this market plateaus itself, right, the equities, and eventually gets its bounce going. And it's going to be those bounces that come back up to do the retest regens that are going to tell us how much more this market has to go. Because those retests, if they do regenerate lower, right, those are going to be large ABCD structures to the downside, and we're going to see breaks on the weeklies more so, and potentially eventually get breaks on the sectors and potentially eventually on the markets. But that's a ways down the road. You know, that's way down the road. We're not even close to that. We may not get that, right? I mean, I can't see that far. All I can do is project what could happen. What I can see is what's happening probably a week or two. Looks to me like, you know, we're going to get more pressure, but we're getting close. Russell's given us the first sign tonight. I suspect a lot of those sectors are about washed out, and they're going to give us signs next. I want to see the XLE do it, and I want to see the NASDAQ. The NASDAQ's the other one. Those three. So Russell's already doing it. Let's see what the other two, when the other two can actually do it. And that's when you probably get your bounce. Hey, folks, thanks for joining me. I appreciate you being there. Tell a friend, tell two. On YouTube, just click on some of those little links and share me. Show others what you got. Take care, and I'll see you next time. Have a great one. Good night.